Hello and welcome to the Japan Forum webinar series at UC San Diego's Japan Forum for Innovation and Technology. My name is Ulrike Schaede and I'm the director of jfit. Before we start, let me announce a few things about jfit. You are at GPS, the School of Global Policy and Strategy at UC San Diego. This is a graduate school. We offer 7-degree programs, including a Master's of International Affairs with a Japan specialization. If you are interested in our programs, please go to gps.ucsd.edu. At GPS, we have a Japan Forum called the Japan Forum for Innovation and Technology, which has the goal to connect Southern California and Japan through a variety of programs. If you're interested in what we do at jfit, likewise, you can go to jfit.ucsd.edu. I also have my own website where you can find some of our offerings separately. At jfit, we run a weekly seminar series. And today, of course, we're going to talk about innovation, entrepreneurship, and change management in Japan. If you have to leave early, make a mental note that next week we will talk about Carlos Ghosn and what we can learn about Japan's legal system. I will have Bruce Aronson from the US Asia Law Institute with me next week at the same time, same place. Today, I have Gen Izayama with me. And so let me stop this, and introduce Gen. Here he is. Hi, Gen. Thank you
Hello.
so much for joining me today. So let me take a little bit of, just a few minutes of introducing you. So Gen is in Palo Alto. He runs a company, he's founded and run a company called Will. And the way he got to Will is that he first graduated from the University of Tokyo Law School. And I believe, Gen, you founded your own your first own company while you were a Todai student. You then started a very normal career at the Industrial Bank of Japan, which was Japan's largest bank. And you came to Palo Alto and Stanford to earn your MBA. And that was just at the time when the Japanese banking system was kind of in a big crisis. And so you decided to stay here and become a venture capitalist. You graduated from Stanford and joined DCM, which is a Palo Alto-based venture capital company. You eventually became a partner at DCM, and then they sent you to Japan, where you were almost like the TV series Hagetaka. You were sort of this foreigner, this Japanese who came back to Japan to show Japan how to, and this is your motto now, to invest, innovate, and inspire. And you then left DCM to start Will, and you'll tell us in a while how you are investing, innovating, and inspiring. And I invited you today because you're really special, because you're more than just a venture capitalist. You have sort of shown to large Japanese companies how to think about innovation, and you're still doing this, and you're having a huge impact in how large company CEOs in Japan think about ideation and scaling. And on the side, you're also an avid golfer, and I heard somewhere that all of your 4 children are golfers as well, and beating you at the game once in a while. So thank you again for joining me. It's great to have you.
Well, thank you very much for the kind introduction. I'm very excited to be here, and particularly do anything related to UC San Diego, since one of my son is going to be a golfer at your prestigious school starting this year. So I'm very honored to be here today. And the topic, like you said, I would say my lifetime mission is to think about, and come up with a mechanism how to, stimulate people to become an entrepreneur and do new stuff, because that's something that I feel missing in Japan today. We have a lot of great companies, great talents, yet it seems a little bit, not entrepreneur enough relative to, let's say, Silicon Valley, where I live today. And, to decode the mystery, what makes people entrepreneurial, what makes people risk-taking, and what are the success factors that, makes entrepreneurs a great, CEOs who can run public companies. So that's kind of the thesis that I'm working right now. So let me start with some basic information about Japanese startup ecosystem today, such that I can set the ground for today's discussion. Let's see. Okay, so the current startup situation in Japan, obviously Japan entrepreneurship ecosystem is growing very fast. Again, relative to US, it looks very small, but it's more than doubled this past 5 years, and we're seeing a rapid growth relative to other industries in Japan. But still, if you compare with US, which I think last year US had about over $130 billion venture capital investment. Japan, it looks very small relative to how big the economy is and how big the population is. So I think this says to me that Japan has so much area to grow in terms of venture capital industry, and also promoting entrepreneurship inside the country. One of the key driver in this Japanese startup ecosystem is a corporate. We call it CVC, corporate venture capital activities. They've, from this chart, their activities 5x since 2013 to 2018, and they have been one of the core driver to provide risk money into Japanese, entrepreneurs, which helped, create this vibrant market in Japan today. Another area is the government. This is very new to me. I mean, 10 years ago or 20 years ago, I would rarely see government officials talking about startups or entrepreneurs. Entrepreneurs or startups were not recognized as a real industry. But now they are giving a lot of initiative, including tax breaks for corporates investing into startups, to government running their own venture capital fund, like Japan Investment Corporation. They have a budget over $20 billion to invest in particular industries and promote entrepreneurship. And also they have some subsidy programs or startup endorsement programs like J Startup. If you're endorsed as a J Startup selected, the government would give you a preferential treatment when they need to procure IT services. So that's very good for startups. And also Schaede, which one of the projects we run with the government is nationwide entrepreneurship boot camp. We spend about 6 months on the weekends to train people in the big companies or people who are with government officials to think like an entrepreneur and actually, become entrepreneurs within their organizations. So those are very good signs. And another good indication that was not there 20 years ago is that people from well-known places are becoming the founders of startups. So these logos, for a lot of them, are already public companies in Japan, very successful startups. And some of them, Sansan Money Forward, they were both founded by ex-Mitsui, ex-Sony person, very, very well-regarded entrepreneur today. And we're seeing some university grads from Tokyo University starting a business and being successful public company like Gunosy. And today, the core, I would say, driver of entrepreneurship, founders of startups are the Western consulting and investment banks. They get good training for 2 to 3 years, then they find their friends and they start a company. So that's another new movement that wasn't there when I was in Tokyo. Now, despite all these good, things happening in the market, there are still barriers that slows the change in Japanese entrepreneurship ecosystem. One is the corporate behaviors. As you know, most of the Japanese are still, promoted on a seniority-based system. And when the innovation today is all about digital technology, it's very hard for senior CEOs to think about their strategy if they're not a digital native people. So that's one issue. Another one is that, a lot of our companies, Japanese companies, have a consensus-driven decision-making. Unless you're the founder CEO or the founder family or the CEO, it's very hard for even a CEO to make their own decision. And you need to really get, it takes time to drive consensus. So that makes it really difficult to take any risk and try new things. And finally, all of us Japanese are trained not to make mistakes. So we inherently, have that, fear of failure, sense of fear of failure throughout our life. Starting with educational system, and even when we join a big company, the people who make the least mistakes will get promoted. So these systems are not easy to change. Yes, things are changing gradually, but I see these three elements as a major obstacle of preventing, risk taking, or becoming entrepreneurs in the society. Now, how do we break this barrier? I think there are multiple ways to do it. Here are three popular ways that I see in Japan today. So to break the seniority-based system, a lot of companies are adopting this so-called dejima strategy. Dejima is a concept of creating a outside external island, remote from the headquarters, where people who are responsible to run an innovation project are going to be living in a different office, different culture, sponsored by the headquarters budget. So this is a concept to create a different corporate culture where they are allowed to take risks, and they were actually encouraged to take risks and try something new. Some examples: ANA airline company has a group called DD Lab, Digital Design Lab, where they look different, they think different, and all the members of DD Labs look completely like a Silicon Valley entrepreneurs. Mizuho Bank, very traditional organization. They have an organization called Blue Lab, where they hire a lot of people from different industries and try to create this innovation department within Mizuho Group. So those are one popular approach. Another one is, let's just bring in someone who is expert on innovation. So Panasonic decided to hire expert from outside, from SAP to Google, the co-founder of Google X, to run their innovation project. Fujitsu also hired the CEO of SAP Japan to run their digital innovation. And obviously Toyota is hiring a lot of people from Western companies, including head of DARPA for automotive, some of the self-driving projects. And I think hiring people with different skills to diversify their senior management is one of the ways to encourage innovation in the organization. And finally, to overcome fear of failure, a lot of companies depend on startup to take the risk. If they can't do it, let them take the risk. So they'll provide capital, and sometimes they try to acquire them. But the point is, they call it's called open innovation. By I think I mentioned in a few slides earlier, corporate venture capital activities has increased quite a bit, because if the corporate cannot take risks, they would help these entrepreneurs who are willing to take risks try new things, and they'll write a small check to allow that. So these are very popular, I think, approaches that I see today. But again, it's not very easy to do these things. One, setting up a dejima, yes, it's easy to set up an office outside of the headquarters, but to truly create a diverse, environment where people are allowed to explore new things, you don't want, if you're just, with ANA people, Mizuho people, it's very hard to look beyond your scope of industry. So if ANA to explore something beyond airline industry, it's going to be extremely difficult. So creating a diverse perspective is extremely challenging, even though you're successful spinning out the Dejima office within the organization. So that's one still issue with Dejima strategy. And also, like, collaborating with startups, it's easy to say. And I mean, it's very easy to go to these parties and events to schmooze with startup founders, but the large corporate employees, where I used to work, are not trained to work with startups. So they have a completely different protocol. If you really want to make sure that this open innovation is effective, you really need to understand how venture capital works, and also how entrepreneurs think about business. And also you need to understand the large corporate protocols. Unless you understand all of those, it's very hard. You see a lot of accidents happening because the expectation and what they say and what they expect is so different among those people. And finally, encouraging risk taking is, again, it's very easy to say, but it's very difficult because we were educated and trained not to make failures. So how do you change that mindset is the biggest challenge that I'm tackling with right now. I almost have to brainwash people. I have to unlearn them what they are taught to be right and make sure that they can take risks. And one thing I have to do is I have to create this so-called psychological safety zone such that they don't get punished or they don't have to feel embarrassed making mistakes. And if you can really create that kind of environment, people would change their attitude. So those things are, again, these things are easy to say, but there are still challenges that is not obvious from these points. So to enable this, I created a lab myself where people are allowed to take risks. People don't get penalized, and I'm going to help them take the right risks and make sure those risks are rewarded, and hopefully a lot of the projects they run under my lab is successful. So how do I do it? My lab is set up. It was a primary objective to do three things. One is to connect large corporate to the startups with the right technology, or sometime the right technology or the good business partner in our mind. And so our team consists of ex-entrepreneurs, ex-venture capitalists, and ex-large corporate key senior management team. So we have a mix team who will help bridge these different ecosystem, and we'll try to invest corporate money into startups and make a mutually beneficial environment for both. We also have this activity called business creation, where we try to help in large corporations launch their new business in our Dejima island. Again, we have this psychological safety where people who are sitting in my office are allowed to try new things. And we also teach them how to take risk, or particular skills like design thinking to lean startup method. There are so many particular skills that entrepreneurs in Silicon Valley use to launch new business. So we also provide those lessons and skills in our lab. And some of the outputs of these three activities of the investment, to do investment, my lab have sponsors, a lot of corporate sponsors who wanted to be part of this, a lot of industries, and we have about $1 billion of budget to try new things and promote innovation from these investors from these companies, from banks, telecom companies, airline companies, consumer companies, media companies, across all kinds of big companies in Japan. So through our investment, we would always connect those US startups or European startups to Japanese companies. Sometimes they just become a user. Sometimes they have a business partnership to create new products in Japan. But the point is, you need to have someone in between could create this constructive, mutually beneficial relationship, because oftentimes the expectations of startup and expectation of the large corporation is quite different. And that's where things become ugly when you mishandle their interactions. So that's one thing we do. Second one, again, we spin out business from our partner companies. Sometimes we find a lot of gems inside of the R&D department. They never get commercialized somehow because of the budget issue or just a priority issue. I go in, I pick them up, and I commercialize it inside of my organization. And we have done about a dozen projects this past 7 years. These 6 projects are very successful projects. Again, the first project, a company called Soracom, we spun out an IP technology from NTT Docomo. We commercialized it for 2 years, and we sold it to KDDI, which is another carrier. Very successful. We sold it over $200 million. So that was a great business return for us. Curio is another interesting example. The IP originally came from Sony. It was a home IoT product. We incubated for 2 years, very successful as a product. They bought it back. So now we took the risk to commercialize it, and they thought this looks legitimate, real, so they buy it back and roll it into Sony's product mix. So these are ways to leverage external environment to accelerate innovation and risk-taking if you cannot do it inside of your organization today. Finally, fostering entrepreneurial culture. This is the most difficult things, but I think this is the most rewarding activity of all I do. Training people, bringing senior executives to Silicon Valley, trying to make them feel what it is to become an entrepreneur. Why is it so important to take risk, and why these senior people are the people actually who has to drive entrepreneurship in the organization, because they are the decision makers and they have power to do so. All important things. And again, with the government, we try to educate the Japanese society overall. It includes college students to people over 65. We have a lot of people come to our seminars on the weekend. And that, again, the objective here is to teach them why is it so important to have an entrepreneurial mindset in the world we live today, where things are unpredictable, and we have to have a mindset to create our own society, not wait for orders, which was okay probably 20, 30 years ago. So that's kind of what we do. A little bit of long-winded introduction of myself, but I'm happy to answer any questions around this topic.
Great. Thank you so much. Let me see. I need to find a way to unspotlight you, which I'm having a difficult time with right now. Here we go. Okay, let me rejoin you. Audience, if you have a question, please type it up in Q&A, and I will try to build it into our conversation with Gen. And already we have a few questions, but let me ask you a little bit more about the J Startup and the large companies. So J Startup is a government project that I think at the heart is trying to address the fact that the exit options in Japan are very different from Silicon Valley. So when we think about exit, now I'm sure you've seen the METI report recently that had numbers. In Silicon Valley, about 80% of exits from a startup are actually M&A by a large company. So some large company buys the technology and then it becomes part of this larger thing. In Japan, 80% plus of exits are IPOs. And that's not because sometimes people say the entrepreneurs like to remain the shut show and so forth, but there's a larger issue that the large companies in Japan are often not interested in buying startups, right? And can you talk a little bit more about why that is? And so that, open innovation means that, sometimes we can outsource ideation to a startup company and bring it back, but that doesn't seem to be the habit in Japan.
I think of all the answers to your question that are written in some textbooks, just being in this industry for close to 20 years, I think the biggest hurdle for Japanese companies having a hard time, acquiring these young startups is a pride issue. Meaning it's related to the senior age-based promotion system. But oftentimes, when you're decision makers typically older than the startups, and at some point they have hard time making these young people rich, right? When you acquire a company, young people become millionaires, and there is a little bit of that pride issue where people tend to struggle. I'm working for this company for so long, yet this young entrepreneur that came here, CEO loves them and want to buy this company and want to pay $100 million or $500 million. I don't get it. Why is this startup worth this much? So there's a little bit of that human psychological issue, and why is it not very common in US? I think US is, the labor liquidity is so different. I mean, people, senior management change all the time, and people are basically rewarded merit based. So if you do a great M&A, and if that's your credit, you are financially rewarded for driving that M&A. Whereas Japan, you are not rewarded. It just, your life don't change just because you did a big M&A. So there's a little bit of incentive, there's a little bit of pride issue, there's which is all kind of human psychological issues that is preventing a lot of M&A to happen. And similar to that, I think a lot of people say it's always the NIH mentality of Japanese corporate that prevents M&A to happen, not invented here, which is extreme, closed innovation style that Japanese companies embraced over the decades that is preventing people to buy companies, even though open innovation is one of the most popular word in the business world today. So again, NIH in my mind, yes, it's a word NIH, but it's all about your pride. If you're too proud about yourself, that creates NIH. If you're very practical, if you know that it's much faster to buy this company than you build it yourself, you're going to buy it. But I think that, that objective thinking does not exist because of sometimes pride issue. Sometimes there is a little bit of that jealousy concept about M&A. And again, when you think about acquiring startups are never perfect. So there is a little bit of that. Why are you paying this money to acquire a startup that is, is not even resourceful as we are, and they're younger than myself, and I don't get it. So I think that is a huge factor that I've seen in the past. Every time I have this issue, US is 80% M&A, 20% IPO. Japan is the other way around. Why can't we close the gap? Or why can't we flip it? I think that mentality of the human being is so hard to change. And, we just have to, this is not gonna change overnight in my mind. I think, having said all this, we one of our mission actually, because we're bridging startup world and the large corporation world, we're trying to educate large startup that, hey, instead of you spending $100 million to create this, you can buy this right now for $100 million. And that means you're saving your time. And maybe there are some flaws you may not like, but you can fix it. And I think net, you're going to benefit of, buying the time by spending $100 million to acquire these companies. And I think people are gradually understanding the concept of buying the time through acquisition, or again, that because the world is becoming so much more unpredictable, it's just so hard to do everything yourself. Therefore, you have to work with startups, and sometimes you have to acquire some of the company such that they will listen to you, or they would work like a partner. So it's going to take time, but I think it's just culturally how people perceive. It's linked to how Japanese employment system works. It's not very merit-based, and again, how we perceive startups. All these things contribute to the fact that big large corporations are still not willing to do a lot of M&As, particularly in the startup.
Changing, right? So we have a whole a cluster of questions around incentives for the startups. So let me ask the first question that actually is on my mind. And that is that the work style reform, which is a 2019 law that makes it easier for people to change jobs, and also the attitude of young people is changing, right? And so we see this now expressed in numbers that job mobility is going up. People changing jobs.
Yes. Yeah.
And what I'm wondering is whether that's good or bad for entrepreneurship. And it could be bad in the following way, that the old until now, when to the extent we find entrepreneurs in Japan, it is often people that work for a large company and said, I am tired of this hierarchy and I want to run my own, I'm going to do a dassara, I'm going to end my life as a salaryman and I'm going to start my own company. But now that job mobility is up, do you have a sense that might actually give more options to these people that are not entrepreneurial, and so that we see less? Or does it actually make it easier to become an entrepreneur, and that society is getting more used to people changing jobs?
I think what I'm seeing at least is latter, where the more, it's always, when you have your friend who started a company, first reaction when there's only one friend is like, oh, you're taking two risks, good luck, and no one takes him seriously or him or her seriously. When you have multiple friends or multiple people in your age starting, jumping out to become an entrepreneur, then you start thinking, oh my gosh, am I missing something? Oh, am I not? I mean, they look cool. I don't look cool. I mean, I should be taking more risks. And there's a little bit of that pride issue, right? I want to be in that. I want to be in the spotlight. I want to be, I want to look macho or something. There's so many ways to describe this, but I think when you see more people joining the world of entrepreneurship or startup, I think that's going to accelerate people having more interest. And when you have more people in the entrepreneur world, again, the success ratio is still very low, like 1% or 2%. But when you see a person who become a billionaire out of these risk-taking actions, then people start to think, oh my gosh, he or she is so successful. I should have done that. I could have, I was no different from them. So to have a role model or someone close to you becoming an entrepreneur, being successful, that triggers whole tsunami or domino effect of society waking up, particularly for the young people, because young people, they're kind of lost, right? They're it's sad that when people say, oh, they're never going to be richer than their parents. If you think about this is really sad society. If you're, we were always growing up with the assumption that my life should be better than my parents, and I'm hoping my kids' life will be better than mine, because the world is evolving, and if you're working hard and if you're learning new things, we're hoping your life will be better. But if Japanese society is losing that energy level where young people are losing hope about their future, that's not good. But I think entrepreneurship is one of the few areas where you can see success. Again, very risky, and the odds are not that great. But when you have one or two breakthrough success, that really changes people's mindset. And I think, as you know, Japanese, when you have certain particular role model, they tend to, move in a herd mentality. Unlike US, there's so many different, people in US, and it's hard to have a consensus on anything. But in Japan, when certain model works, people tend to jump onto it. So I think what I'm seeing right now, and at least in the startup ecosystem, is that when you see some smart people jumping out of large corporations, some of these consulting companies, we're seeing a lot of, their junior people jumping out right after their senpai left and start a company, and which I think is a good thing. You have a role model, and he or she can do it, then I can do it.
Right.
Yeah.
So we have some, Michelle and Robbie had some questions about Japanese culture. So we had earlier in this webinar series, we talked about tight, loose cultures and how Japan is actually pretty tight, where there are some sort of, there's a great agreement of what the right behavior is and very little tolerance for deviance. But what you're saying is that being an entrepreneur is becoming sort of the new normal. And what I observed in the pitch events that I've been to in Tokyo is that, interestingly, these entrepreneurs are yet again pretty much following a right behavior. And the right behavior is sort of the Silicon Valley cool, right? So most of them wear a hoodie and sneakers that are not properly tied or red or whatever. And so there's sort of a Silicon Valley uniform in the startup world, which I actually find very interesting in terms of sort of the new normal is yet again sort of a tight culture. But what the question is that we have here is, are there some parts of Japanese culture that are actually helpful, like this agreement? Once there's a new normal that has been established, you call it a role model, right? So sort of a new set of behavioral accepted behavior, then it can actually happen very fast.
Yes.
Right? So that it could actually be a one-day switch. Once it is okay for young people to not be a salaryman in a suited up with a little briefcase, then suddenly this new normal is taken over, and we'll see much more. Is Japan at that point yet, where or is it not quite there yet?
I think, well, you mentioned the first question. I think you said, it's like, what are some of the benefits or positives of this Japanese, some of the cultural elements of Japan. I think you already explained a little bit, but yes, it takes time to build relationship and building trust. As you know, when you do something with big company, it's not about how fancy your presentation was or how sexy your presentation was. It's all about nemawashi and going through the ranks and bonding and playing golf and drinking sake and all these things, which is all new to Western people, right? But when you do all the right things with Japanese, corporates, or you create a very strong bond. Meaning, once you establish a bond, your business relationship is very, very hard to break, which is good for startups, because startups are always at the risk of losing business because they are a startup. You bump into a company, they like your product, they'll sign up, and they can churn in 2 months, or they can churn after a month. But Japanese may take few months actually to understand your product or service and actually become a paying user. But once they trust you, they don't churn. And that's the beauty of doing business with Japanese. Even today, which we always promote, we tell a lot of our Silicon Valley portfolio companies that, hey, it's going to take time to do business with Japanese companies. But trust me, once you establish a relationship, they will be your best customer, because both, they're going to love you. They're going to try to promote you because they're already user and they don't churn. And, again, they are well-funded companies. And, again, Japanese IT spending is still the second largest in the world. People think China is big, but, when you look at the IT spending, how much you spend for IT, services and equipment, Japan is right next to the US. So again, that the thing that looks like a barrier to do business and inefficiency in Japan could be a very positive thing in terms of doing long-lasting business in Japan. So with Japanese. So I think, but again, a lot of entrepreneurs, as you know, don't have a lot of patience to do this, particularly the Western entrepreneurs or even Japanese entrepreneurs, because they're just living off monthly burn rate, and they know that they're going to run out of cash in 6 months or 3 months, and they don't have patience to wait to establish these relationships. But once you can plan how to build relationships and how do you create trust with the Japanese corporates or individuals, you should be benefiting from that relationship. So I think there are a lot of positives in my mind than negatives. But again, these rules and business protocols are so different that to educate this to a lot of our friends in Silicon Valley is hard, unless they lived in Japan or they know Japanese.
So staying with culture a little bit, so Jenny, who hails from Australia originally,
Yes.
wants to know why Silicon Valley is such a big brand for innovation. Aren't there places that are a little bit closer culturally, or in terms of the role of banks, or in terms of the economic system?
Yes.
And so how did Silicon Valley end up with the brand for innovation in Japan?
Oh, in Japan?
Well,
Yeah.
she wonders whether there are better, but whether there are other models that were better comparison sets, where we could say, well, yeah, okay, so Japan is not, the M&A is, sorry, the venture capital is not as high as it is in the United States, but how about comparing Japan to Germany or Japan to some other places?
Yeah, I think, a lot of, as you know, Japanese government officials and corporates try to copy Silicon Valley model, which I always tell them it's a waste of your time, because you're never going to make Silicon Valley in Japan. Whether it's in Tokyo or Fukuoka or Osaka, it's just so hard to replicate what you have today. Great weather, great university, a lot of money, a lot of technical bases, going back to World War II. I mean, there's so many things behind what makes Silicon Valley great. And it's just so difficult to have all those. I mean, to have this weather that you have, sunny day for 10 months out of 12, a year, is going to be hard to beat. So that's one. But I think for Japan, I think the essence of Silicon Valley is still most effective in Japan. One, obviously, Japanese, as you know, Japanese have a little bit of weaknesses in American culture. So anything from US, somehow looks cool for Japanese. Maybe it's from the from the history, or how we are culturally brainwashed from our US culture. However there's so many, sociologists who analyze these things, but we just have a weak point in US, just like I was. And I had a lot of admiration about US culture, and that led me to come to Stanford. So there's that coolness about Silicon Valley. And two, it's just right across the ocean. I think that proximity, the geographic, the fact that it feels so close, it's just across the ocean, feels to Japanese feels, oh, Silicon Valley is something we should be looking, we can observe, and we can try to copy. And I think it just creates a different type of emotional feel. Like when I talk to people in Japan and talk about like a startup ecosystem in New York, they say, oh, that's too far. And I'm like, yeah, but it's still in US. But I think Silicon Valley has this special, charm. Yes, it's a US kind of cool US culture. It's a Western Wild West, kind of a, hip risk-taking culture, with the gold rush and all these historical background, and great weather. I think it has all the elements that Japanese love, I guess.
Yeah, well, it also is the success story, and sometimes opposites attract, right? So if you take somebody out of Japan into Silicon Valley, there's often a culture shock, or actually going back is probably more of a culture shock, and yes, maybe that is actually also helpful.
Yeah, and this add to one thing. I think another element that I don't see in other innovation ecosystem. I've been to Berlin and go to Paris, and all these. There are a lot of European, a lot of the, Lithuania, Estonia. There's so many innovative areas around the world. But I think Silicon Valley, in my mind, is most welcome to foreigners, meaning very diverse. There's so many people, not just from Europe, people from Asia, Europe, Africa. I don't find any other place. If I go to New York, yes, there is a startup ecosystem, but it's more Caucasian driven than here in Silicon Valley. And it's kind of Europe is like that. So I think for Japanese to enter any of the incubators, I think Silicon Valley incubator looks more safe, just because there are more agents and more, accustomed to diverse background and culture. That's a big element.
So we're having a set of other questions. So let me ask one more question on the incentives for entrepreneurship, and that's Taka is one who is an angel investor in San Diego, and he would like to know why there are so few angels. We know that there are now a lot of rich individuals. Yes. So it's no longer that there are no rich people, but this idea of starting your own company, becoming wealthy, and then giving back into the system by taking a risk as a personal angel to an entrepreneur is still very rare, right? So in the US, we're talking billions of dollars that every year are invested in entrepreneurs. Yeah. Why is that?
This one again is so, when you grow up in that country, it's very obvious. It's in US, a lot of my friends who are rich, yes, they do angel investment left and right all the time. It's almost like a donation in my mind. But in Japan, when people hear about angel investing, as you know, Japanese culture even hated investing in stocks, meaning once you enter the business world, you're supposed to work to make money, not invest to make money. So investing itself was like a sin in the culture, at least when I grew up. So when I talk about stock investing to my parents, they're like, oh, no, you're supposed to work to make money, not invest in stocks. So investing activity itself has a huge negative connotation in Japan, in Japanese society. It's hard to break that because, still there's so many senior people living in Japan who thinks investing and becoming rich is a bad thing. Don't talk about investment. When I say, oh, I invested in this startup and I made a lot of money, they would warn me, don't talk about that in public because people are not going to like you. And that comment, that small comment one line of comment tells me, oh my God, this culture is so different from the United States. If I talk about my angel investment becoming successful in the United States, I look like a superstar. But when I talk this to my grandma, they're going to criticize me, or they said, don't talk about it in public. So there is a huge perception around, investment still not having a positive, image in Japanese culture. And I have a lot of, successful entrepreneurs who are the angel investors in Japan, but, they don't talk about it much in public. They only talk to their friends, and I ask why. And they're like, oh, I either get harassed by some random guys who are jealous, or, a lot of the senior people are not going to like me. They think I'm doing something bad. So I think that social stigma of investing has been so long. I mean, I guess it was good when it was like, part of the Japanese culture. You're supposed to work hard, and sweat to make money, whereas investing looked like, it's just not legitimate. Like my dad would say, well, what are you doing? Yeah, I mean, you're supposed to work. Don't invest in and wait in the device. You're supposed to get on the ground, get on your feet, you move your hands, you sweat, and that's how you create value, not by coaching or just, giving advices. But so, I think that's a still major obstacle to encourage angel investing. And we can talk about all kinds of, some, tax issues and things, incentives, things like that. But I think that's still the mindset is the biggest obstacle of promoting angel investment in Japan.
So it's not, investment is not something one does, and one certainly doesn't talk about it, right? And flaunting is also bad. So being rich is actually still something that many Japanese have a difficult time with. You wouldn't know unless you look very carefully. The cloth of the coat might be a little bit finer.
That's right.
But
I mean, it's interesting. I mean, being rich, nothing wrong about it in Silicon Valley, but I think being rich in Japan have a very different meaning, unless you do it right. There is so many subtleties of becoming rich and being, regarded arrogant or rude or just not real. And I kind of understand it, but that mindset is still very strong in the society.
So can we return to the large companies for a moment? You talked about the Dejima strategy, which of course is sort of the skunk work approach. And so we have a set of questions around that. So one question is, how will that ever work? I mean, if they let the people do this in a skunk work, then corporate eventually will not benefit from this, right? So if it's too far away, then how can it become this? And then also, why would Sony, Takaki wants to know, why would Sony do this? I mean, for them, it would be chump change to do this in-house. Why would they give this to you? Are those two things, those two questions related?
Yeah. People tell me Sony and NTT must be so dumb to give you a piece of IP and you make money. Obviously, they also make money, but why wouldn't they do all this by themselves? And the reason is very simple, right? These things are very obvious when you do it, but taking a piece of IP and commercializing is very, very difficult. And we in the entrepreneurship world, we talk about 0 to 1. Creating something from a technology is not trivial, because a piece of technology can be transformed into so many directions, and you need to pick a right way of transformation to make it business success. And that part is equally difficult as creating the technology itself. So technically speaking, there's no reason why Sony people or NTT people cannot do it. But sometimes it benefits with someone like us who has an independent view, who came from different type of industries, who is always looking at how the world is changing, may have a little bit of advantage over people in a big corporate who are, typically spending most of their time doing their own job. Our job is to predict or create our future, right? So we're always thinking about new technologies, or we're always thinking about how these new emerging technology would impact our life. And that's our job. So by us training ourselves to look at the future, maybe 6 months ahead of average people in the business industry, we have advantage of starting new business better than some people in the elite organization. So it's a great partnership. They have a piece of technology. They don't know how to make it valuable. We know how to cook it. So it's almost like they have all these great ingredients. We're the great cooks. And once they transfer us all these ingredients, we'll come up with great, great recipe, and it's going to be commercially really well. And in our case, they have a right to buy everything back from us. So that's how our lab is structured, such that they don't lose their IP to someone random or their competitors. We set up our lab, like again, as a skunk works. We're going to help them commercialize it, but if they want to buy it back, they are, we'll be happy to give it back to them at the right price. Obviously, they need to reward us for making, creating a real business out of technology. But that partnership works quite well.
I can see that. So Silicon Valley, maybe, so partially also answer to the previous question. Silicon Valley really has developed great processes for customer identification, a lighthouse or beachhead customers, yes. And then, minimum viable product. And those are sort of processes that have been developed here and are tried here and are great to do here. But what happens when this thing goes back to the large company? Isn't it then sort of gobbled up in some business unit where then the old culture comes in, right? The pride, yes. Some large company challenges that are perfectly reasonable. KPIs, so performance indicators that are towards metrics that is fledglingly little, yes. Technology can never reach. So what happens when that thing then goes back to, in this case, Sony?
Yeah, so I would say sadly half of the project just becomes failure because they get, they're acquired in a different culture where they lose agility, they lose risk taking, and they lose entrepreneurship, and they become a boring product. So they're dead after they are rolled back in the company. Another half is quite successful. So they establish a very great commercialized technology, but they don't have a credibility in the market because they're a startup, because people either, I never heard about them, I don't know whether the technology is real, I don't know whether it's worth paying them. So when they are rolled into a big corporate umbrella, they can overcome all of that. A lot of the world would see, oh, they must be credible because they are part of XYZ company, very famous, reputable company. This startup project that is still 100% subsidiary of this large corporate. Benefit of having that parent, endorsement to do business sometimes globally, and they don't have to worry about fundraising anymore. And it's a mutually beneficial partnership because the large corporation would not gobble up the culture. They would retain the culture of the startup, because they view the whole reason of acquisition was to buy the agility and the risk taking and this innovative spirit of the startup, and they want to retain it. In order to retain it, they don't want to put that into their culture. They want to keep a proper distance and a proper governance structure such that they don't destroy the good part of entrepreneurs. So I'm seeing that latter half model, and I'm trying to come up with what are the right, PMI, post-merger integration that large corporations should be aware of, particularly when they acquire startups. So I have enough case studies in myself that here are the things you should be watching out, and here are the things you should not be doing because you're going to destroy the value. And whether they're listening to me or not, it's up to them. But I think it's interesting that, depending on how you deal with the acquired company, you can destroy entire value. I forgot to mention one of the things why big company benefit of letting us run these incubation projects is that typically these innovation project is sometimes beyond their core business. So when they take the risk to start a new business and fail, I think you get a harsher criticism from the media and also from your internal people that why did you do this stupid business? Why did you even think about this business? Whereas when I start a new business and become successful and they roll it in, basically it's safe. They can start a new business with a very safe way. They don't. If I fail, they can just write it off, right? But when I'm successful, and if they're rolling into the organization, it's one of the most secure way to start a new business. So let's say, instance, the Sony's case, it was an IoT business. Sony didn't have an IoT business at that time. So it was very risky for them to use their own budget to launch the Sony logoed IoT product, because if they fail, it doesn't look cool in the market. So they wanted to have this Curio, different brand, and it's a home IoT product built by my team, and see what happens. And after they see the market, adopting and taking off, they wanted to roll in. And now it's safe to put it under Sony's umbrella. Right. So it's a nice way for big company to protect their brand while taking a venture risk using our lab. And then without eliminating that risk of failing, they can buy it back. And for a large company, it makes completely sense. It makes so much sense from the business point of view.
All right, so I have a last question, which is a big question.
Yes.
Robbie wants to know how COVID-19, the pandemic, affects all of us. So I think there are two parts to this question. One is, how does it affect entrepreneurship in Japan? Is it an opportunity, an innovative set? And how does it affect Will and what you're doing?
Yeah. So when you think about entrepreneurship, I would say 80% of the activity is in the digital space, meaning software. So what does that mean? Actually, COVID-19 is creating a humongous opportunity for a lot of the startups today, because so many large corporations and industries they wake up and they realize they need to digitize how they run business and also how they communicate with their employees. If you think about how we live today, we have to work from home. That means if you're an employer, you have to make sure that people are really working. And and if you need to hire someone, you need to do it over Zoom, and you need to have all these right tools to hire and select and educate these people. So there's so many things that are not digitized in a big corporate today, which needs to be digitized in the next decade. So all of those areas are creating humongous opportunity for startups to create a unicorn business, in my mind. And not to my surprise, a lot of our portfolio companies, which are in software space, is actually booming since March. The revenue are much, they're beating all the projections just because of the corona virus hit, and all the corporates are now purchasing a lot of digital services to augment their analog way of doing business. And I think this is going to be a long-term trend. Even though this COVID-19 may go away, we now know that we have to fight with these viruses in the world, unfortunately, and that's going to change how individuals spend their time, how we work, and how the organization manage people and deliver service and do business. All of that need to change, and at least right now, we can do that through the power of internet, the power of digital. Is the way to do it. So COVID is creating a great opportunity for a lot of the startups today. And so in a way, I think it's for talking about Japanese government, I think this is a time where they should not talk about cutting budget for startup, promoting entrepreneurship. This is a time you need to spend money to push digitization of the digitize the government, digitize the corporates, and it is a rare opportunity for the entire society to embrace digital technology. Because in Japan, people always excuse that, oh, we have too many senior people, they don't like digital, and that has been always accused not to, digital transform their organization, but they can't excuse anymore. We have this imminent threat which cannot be, which digital technology can help us overcome. So it's an interesting opportunity for us.
Great. And on this happy note, time is up. Unfortunately, I could go on for hours, but here we are. Thank you very much again for joining us and for explaining this very exciting work that you're doing. And thank you for all of the wonderful things you do for Japan and for entrepreneurs. So everybody, let me just briefly announce next week's event. We have Bruce Aronson with us next week, and we'll talk about the Carlos Ghosn saga, the movie like Escape in the Music Box will actually not be the main topic, but we'll talk about Japan's legal system and corporate governance and the entire background to that story. So join us if you can, and it'll be great to have you here. Thank you again, and stay safe and stay well, and we'll see you next week. Goodbye.
All right.